Hey guys, like I said, I really don't like to be tweaking and stuff my portfolio that much, and maybe I should have just left. I should probably just be buying BAK right now with it down 30% and dollar cost average. But I could be wrong on BAK, and for that reason, I really don't want to invest any more money into it. It would be nice to, have 1,000 shares. I have 900 shares of BAK. It would be nice to get to that 1,000 mark, but as you can see, I'm down. I put in almost $24,000, and that's less than 21,000. So I'm down quite a bit, but I have earned quite a bit of dividends as well. As you can see, BAK, I just have a 1% weighting, although it's actually over 40% of my portfolio right now. And like I said, some of these percentages can be off, but it shows that I'm up 35% on my picks, which is pretty good. The first monthly dividends Roth is basically Maine and SJT. Maine is actually, I think, 60%, and SJT is 40%, but it's supposed to be 50-50. That's just because SJT has been down quite a bit. I got 20 dividend challengers that have been paying for 5 to 9 years. I added 3 stocks to the 100 bagger column, and I bumped up the weighting to 4%. Water, I got 4 stocks in that, and I got 2%. I got like American Water Works, I want to say Roper Technologies, and Exelim or something like that, and I forgot the other one. I added 1% in Bitcoin. I personally think Bitcoin is worthless, but there's a lot of people that think it's going to be worth at least $1 million one day. So if that's the case, if it goes to 1 million, even having 1% in portfolio dedicated to Bitcoin might be worth it. I loved Discovery back in the pandemic. I don't know if I really love the Warner Brothers Discovery merger or whatever happened, but Discovery by itself was way undervalued in my opinion back in the pandemic, and I think it's actually gone down since then. Microsoft, I think, will do good over time. Exxon, I think, will do good over time. Google, I think, will do good over time. Oracle, I think, would do good over time. IBM is kind of a wild child. There's a couple of value investors that think IBM is super, super duper way overvalued, and they might be correct. But one thing I like about IBM is years ago they had a robot that basically got on Jeopardy, and so they could be a player in the AI technology hunt. I don't know. So that is why I got IBM up there. Ex-U.S. real estate. The value of the real estate, if you look at the world, 75% of all the valuable real estate is in the United States. And I don't think that is an accurate, I don't think that's accurate. So if 75% of the world's real estate value is in the U.S., I think the rest of the world's real estate is probably undervalued. So that's why I have ex-U.S. real estate ETF. I did have gold and silver. I just limited it just to physical silver. Occidental Petroleum, I think will, even though that's probably overpriced right now, is probably do good in the long run. I got the total U.S. bond market. I think it's B&D. BOO, which is the S&P 500 index. So all these are just like one. I did bump Google up to 2% just because it's two separate companies there, kind of. But if there is a downturn, having some of these bigger companies might help me on the downside. I think physical silver is way undervalued. I think ex-U.S. real estate is very undervalued. Berkshire Hathaway, I think, is probably overvalued right now. Same thing with Microsoft. Same thing with Exxon. Same thing with Occidental Petroleum. Same thing with IBM, Oracle, and Google. But I do think all of those will do good long term. So in the short term, I might get killed, but in the long term, I think I'll do okay. I just, I don't really like a lot of diversity, but I would much rather have 4 or 5 stocks maybe sometimes, but I think things are going to get bad here soon. And if the stock market crashes 80%, whatever, maybe the bond market goes up. If the U.S. stock market crashes, maybe silver goes up, maybe real estate goes up, maybe not real estate, but gold and silver should go up, and also Bitcoin should go up. And they might go up quite substantially. So these are kind of hedges for something very bad to happen. And for the monthly payers, if the market crashes 50% or whatever, that's actually a good thing, because then you're buying more shares at a lower price. You're accumulating more shares. You're getting a super good yield. Granted, they hopefully still keep paying dividends, because some companies might stop paying dividends when something bad happens. But some of these 100-baggers, I'm just taking a pure gamble on, and some of them value, some of them may not be so much value. I'm just taking a gamble on them. And I'll show you the 4 that I picked here in a few. Thank you.